was looking for a team, a product, and a market.
There are two things that founders should do is that ship code and talk to customers.
It's not about the product by the end of the day, it's about the people. This could be a Ponzi scheme and we'll never know.
And we're live. Hey everyone, I'm Talha Asif, and in each episode we bring you insightful conversations with the founders and builders who are shaping the future of Web3. Our goal here is to educate and inspire while showcasing what other founders are doing for their projects and startups. Today's guest is Lucas, who is the head of product at Credbull. Thank you so much, Lucas, for coming on. How are you?
Yeah, I'm doing great. Always a pleasure to be here talking to you, Talha. We've been working with you guys in the past, and it was great. So nice to be here.
Amazing. So, Lucas, the whole purpose of doing these series of episodes is to bring on people such as yourself who have a lot of experience building successful startups and share it with other builders and founders so they can avoid the mistakes or save a lot of time. So we'll be discussing from that perspective. So I'll be asking you questions related to your experience. But before we do that, I want to quickly ask, who is Lucas?
That's a great question. Well, I'm actually a mix of building products and selling them. I've been working in technology for 15 years now, but half of that I spent in sales and the other half building products. So when I got my feet on products, properly speaking, I actually already had a few years selling these products, which gave me a different perspective because sometimes you have super technical product people, right? That they were building software for a few years and then they got into product. I did the other way around. I was on the business side, and then I started going to the more technical route and building products myself.
Amazing. So I think like Naval Ravikant says that learn to sell and learn how to code. But if you can do both, then you're unstoppable.
Yeah,
so you're unstoppable. Amazing. So then how was your transition to Web3? So how long have you been in crypto and what was your journey? Can you walk us through that?
Yeah, sure. So in these 15 years, I did a bunch of different stuff, from building products from the ground up to taking legacy products, super corporate level, all the way to startups. I worked in funds and company builders, so helping founders build from scratch, invest in startups. I also had some experience working with enterprise level, right? So super structured, rigid corporations. And we went through all different segments from AI to marketplaces, crypto, Web3, and so on. The first time I heard about Bitcoin, this was 2013, so 11 years ago. And at first, I gotta be honest, it felt like a Ponzi scheme to me, even though I went through the white paper, which is funny because as I was going through the white paper, back then I was working in a company builder. So I was surrounded by a bunch of tech people. And we really went deep into Bitcoin's white paper. And the more we were reading, the more we felt like, this is just weird. This is strange. It's super complex. It makes sense. But the market was so small back then that we felt, this could be a Ponzi scheme and we'll never know. And then a few years back, I think it was 2016, I remember I was watching Bloomberg around noon. And, they used to talk a lot about startups. And for the first time, I saw Ethereum being mentioned. And they were talking about how the Ethereum price was skyrocketing back then. And then I thought, you know what? Maybe it's time to go back and really, take into consideration. And so 1 year later, 2017, I was investing for the first time into crypto projects. And because I was working with startups for a few years already, I kind of felt, pretty comfortable in investing in altcoins. So usually people start investing in Bitcoin and Ethereum, and then they go into altcoins, right? For me, it was the opposite. I already felt at home in investing in startups and early stage projects. So for me, since day one, I was looking into crypto the same way that I look and evaluate startups. I was looking for a team, a product, and a market. So one of the first investments I did was on Chainlink. And back then, the token was worth 69 cents. And that was crazy. And one of the reasons that got my attention was Sergey and a YouTube video that he had recorded like 5 years back. and he was talking the same thing 5 years later. So I thought, this is a project worth checking, and that's how I got into crypto, then Bitcoin, Ethereum, and so forth. And then, of course, after
Ama-
that, I started building and running my own communities in different projects.
Amazing. So you had this technical background where you built product and you're familiar with the sales side as well. You started investing, and then you were, working with different products. So now, uh, before we jump into what's your current role, you have seen a lot of startups, and you might have built yourself as well. One thing that I like to ask everyone on this podcast is ideation, right? You said that when you're evaluating a project, you see team, market, and technology. But do you have any framework that you use on picking ideas to work on? Because, as you know, that we work with a lot of founders and we see that some ideas are just not worth it. So in your experience, what framework do you use to pick and choose ideas? And then we'll come to Credbull to work on or invest in. Or let's talk about how to work on ideas. Like, let's say if you're a founder, how do you decide that this is something I want to spend 5 or 10 years on?
This is a super tough question. I would say that more than the idea, the business itself, because the idea will go pretty quickly, right? It's going to turn into a project pretty quickly. The truth is, the idea only lasts for like a few days, right? The thing that stays with you is the project and then the business itself. So I don't take ideas so seriously, but I take the business more serious, and especially the operations. And this is something that people don't really consider, because you as a founder, you may love the market, you may love even the product, but if you hate the daily operations, you're going to find yourself living in a hell for the rest of your life, right? I mean, so you got to enjoy the operations. Okay, let's say you're going to run a software house, right? What is the daily operations of a software house? If you don't love that, if you don't enjoy the process, you're going to hate yourself. Even if you love the dream that you have where you're going to be in 10 years from now, right? You got to at least enjoy the process. So yes, ideas are important, but I try to ask myself, okay, 5 days from now, how do we turn this into a business operation, right? In simple terms.
Amazing. Got it. So you're not too concerned about which ideas to work on, which problem to solve. You're more concerned about, okay, if we picked an idea, will I see myself through it and will I be happy or will I enjoy it?
Yeah,
That's very
exactly. And
interesting.
there's something pretty simple. For example, some people, they just hate B2B business, and others love it. Others hate retail. And for me, this is more important than the idea itself, because ideas, they will have to adapt once you start building the product, right? And even the product will have to adapt to the business. So I see it like in layers, right? You have the idea and then the product and then the business. And if you don't sympathize with the business, then your life is going to be miserable.
Very interesting. So then after you build one or two yourself, do you want to talk about any one of your startups that you built?
Yeah, sure.
And before, sure.
Yeah, I've built a couple startups. Some were my own that I raised capital. Others were for other people, and I joined as a early employee or advisor or whatever. So yeah, a bunch of them. There's one particular one that was pretty interesting. It was OTA, online travel agency, right, that I built. And so first of all, I loved the market because travel industry, amazing. We were building something similar to Airbnb experiences back then. This was like 2016, and Airbnb, they were still just planning to launch experiences. Back then they were just about renting rooms and that's it, booking rooms and daily rentals. And then we came up with experiences 1 year before Airbnb, and we saw this opportunity. Unfortunately, I wasn't able to scale as much as I was envisioning, but the business itself was perfect in terms of market. I had a fit with the business, but then I got lost with my team of co-founder because we were having a lot of friction among the co-founders. And that's another thing you gotta solve, right? You gotta have the right people. It doesn't matter if you have a great idea, a great product. If you have the wrong people, eventually that's gonna contaminate the product and the daily operations you have. Which brings me
Makes
to my
sense.
current vision. Right now, I'm more mature, and when I look at product, the first thing I ask myself, okay, how do I align the people around this product? Because even building products is not about the product, it's about the people around it. And that's the thing you have to deal with as a head of product, a product manager, or a CPO. It's not about the product by the end of the day, it's about the people. And that's the crazy part you've got to understand. Building products is about aligning people first and foremost.
Yeah, I think I was watching another podcast earlier in the day, and they mentioned something that most businesses fail because of co-founders' problems. They are not able to understand each other. And I've personally been through a lot of these similar situations, so I completely agree with you. And I think, again, Naval Ravikant, do you know who Naval Ravikant is?
Yeah, of course.
All right, so he's like one of my mentors, online mentors, and he has another statement is that play long-term game with long-term people. So if I don't see myself working with someone for the next 10 years, I wouldn't work for them for 10 days as well. So yeah, very interesting. All right, so let's jump and then, how did you end up working at Credbull? And then explain what is Credbull and what problem are you guys trying to solve?
This is a perfect hook because I'm here because of a person, which is one of my best friends and somebody that I've been working with for a few years now in different companies. And he invited me to join the team. And when the invitation came from him, I was already interested and curious to know because I trust this person. So again, the thing we were discussing, and I feel really comfortable in building products with him. So that's how I got here. And then the second thing was I spoke with the CEO, Jason. And unlike most crypto projects, Web3 projects, credible business is actually pretty simple and straightforward. And that was the thing that convinced me to join the company. So what Credbull does, first of all, we're a credit fund, right? So we borrow money from investors, people such as you and me, and also institutional investors, right? We take that money and we lend to companies around the world that need this money to grow. Simple as that. That's it. That's the business. And then these companies pay us back with interest, and we distribute this interest to our business, and we also use a part of that revenue to buy our token back and create a deflationary pressure on our token. That's it. That's the business of Credbull in simple terms. And of course, everybody that has invested in our fund also receives interest, right, as profit. That's it.
Very
That's our business
interesting.
in a nutshell.
So recently, I've been playing around with a lot of DeFi protocols, especially on Solana. And one thing that always interested me is the APY or the interest that I can get. Obviously, I try to stay away from interest, but the yields are something that of interest of me. And then one question I ask myself is, where is this yield coming from? Because I was involved in Terra, I was involved in all these protocols, right? If they're promising you these high yield, there's something fishy. So now in your case, you are not like, would you consider yourself a centralized protocol or a decentralized protocol?
That's an interesting question. I'm not really sure, to be honest, because it's,
In, in,
in a
in,
few ways we are decentralized. In others, we are kind of centralized, which I don't think is a problem. Sometimes being centralized, especially in the early days, gives you speed, agility, strength. But we do work with partners, right? We do have other networks operating with us, which gives us a sense of decentralization as well. So I would say with something in between, like many projects, by the way.
Very interesting. And my next question would be, why Credbull? Like, there's so many lenders out there. There's so many projects that are lending. Why Credbull, and what are you guys doing something different?
So we're one of the first ones that is operating as a fixed income for our investors. Yes, we're going to provide interest and profit wrapped as a fixed income for everyone that is investing through crypto. And that on the Web3 landscape is pretty unheard of so far, because we usually deal with a lot of volatility, and Credbull is focusing on doing the opposite. We're actually aiming to provide a fixed income to our investors while being exposed to crypto. And also not so much, because by the end of the day, you're investing in real world companies, right? That have nothing to do with crypto. But you're using
And
USDT and USDC as a ramp up, which is great, which gives you this opportunity to use your crypto to invest and generate profits with a fixed income.
and how And how do you evaluate a company to invest in? Is it again a centralized decision making, or the community gets to vote on which companies to invest in? Or it's more like more central?
That's a great question. So far, we've been using third-party providers to do this asset allocation for us because they've been there, done that for many years, right? So that's one of the reasons why our fund is not so volatile, even though we are operating in Web3 space, is because first we have a network of partners working with us. And these partners, they have years of experience in lending money to other companies. So that's the first thing. We are not the ones operating this financing ourselves, right? We have third parties providers that are doing that in our behalf.
Very interesting. All right, so if I were to summarize Credbull, you guys raise money through individual community member, like anyone in crypto, and then institution. You take that money, and then third parties use that funds to invest in companies, and the profit they generate, you give it back as interest to your companies. What time frame are we looking at? Because when you invest in startups, I'm not sure what stage of startups you invest in or companies you invest in, but like as an investor, what time frame am I looking at for my returns, and are they sustainable? And what kind of companies do you invest in? Is it more like startups or cash flow companies? What kind
Yeah,
of
that's perfect.
companies are
Yeah,
there?
it's usually cash flow companies, and that's one of the reasons why we can give our investors more assurance in terms of the quality of the underlying assets we have. So basically, companies that are already stable, they already have a product, a service that is generating profits, and they just need cash flow, right? So that's why by the end of the day, we are a credit fund. That's it, simple as that. We lend money to companies that already know how to use that money, and they pay us back. Usually, a couple months after that. So our fund is not like super long. You don't have to, lock your money for a whole year. Usually, we're gonna work with shorter time frames, a quarter, maybe 6 months, and we are also not investing in startups, right? So it's not like
Got,
venture capital.
got it. Very interesting. What has been your go-to-market strategy so far? Because you mentioned that you are a product person, you're a salesperson as well, right? So now you explain the product. Now explain me in crypto, many projects have no clear idea on their go-to-market strategy. So how have you guys built your go-to-market strategy, and what lessons can you share for other projects that are in a similar space?
We take risks. So first of all, companies have different cultures, right? Here we follow the motto of move fast and break things. And so our go-to-market strategy, we've been playing around with different ones, and we had some super successful ones so far. I don't know if you heard about the tap to earn games lately, but this was one of our go-to-market strategies. So we launched a tap to earn game in like 7 days, right? From ideation to having something live, it took us 7 days. So we are pretty scrappy, guerrilla oriented, and we move fast. And because we did it so fast, we were able to enjoy the hype. And right now, this tap to earn game is live for 2 months, and we have 130,000 players on the user base in just 60
Nice.
days. Yeah. Um, and why we did that? Well, first of all, we do have a long-term vision for this game, which is to turn it into a serious game and actually introduce people to financial assets within the game, right? In a fun way, right? But then we're connecting this tap to earn game to our own reward platform, which we call the IC, the Incredible Earn platform. And right now, those two applications, they are connected, and they're becoming more connected every day. And the idea is to have people playing our tap to earn game and also playing our reward system, right? Where they can gain points by performing quests in our ecosystem. And then, of course, all that's going to be connected to our fund, where people can just use those points to gain more leverage when they are staking our token.
Very interesting. Don't you think this will attract the wrong kind of audience? And that is a question I ask everyone, right? So with these
Yeah,
stab games or these KOL shoutouts or these airdrop campaigns or these farming campaigns,
yeah,
you attract the people who are in it for the money. But
Yep.
for your project, you need people who actual investors. So how do you tackle that?
I don't think there is. I mean, yes, sometimes you have the wrong ICP, of course, but also things are not so simple. You need people that make buzz and people that carry your brand, and you need people that invest money. So you need both, right? Um, for the tap to earn game, of course, most of them are the brand ambassadors, are the guys that really like your brand and they love it and they engage with the platform. They may not have so much money to invest in, but that's okay because they're going to make noise, they're going to make buzz, and then the people who do have the money, they're going to hear about us and they will come eventually as well. So it's all a matter of breaking down into waves your user base, right? So our first approach was to bring in players and people who are engaged in the Web3 community, regardless of being, great investors or not. And then on a second stage, because we have these people using our platform and testing our apps, once we do reach those who are potential investors, we're going to have a more mature product. We're going to have a stronger brand and a stronger community that can support this second wave of users once they come.
Very interesting. So the takeaway for founders who are building right now is that regardless of whatever your product is, you can leverage this top-to-earn game, acquire a lot of users really fast, and with network effects, which means that if I'm playing it and I'll invite other people as well, you can gather a lot of users, and then those users become your brand ambassadors and talk about the game, and then that would further attract actual investors.
Yeah,
Very
exactly.
nice.
And also, if you
And
think
I
about it in
think
a practical term, you're not going to put too much money in a brand that you never heard of, right? Or a
got it.
brand that doesn't have too many users. But now if you access an app and you see like we have right now more than 100,000 people on our Telegram, right? Our Discord has like more than 20 or 30,000 people. Now it's way easier for you to trust your money with us, right?
Makes sense.
Because you see
Very
there's a lot of
interesting.
people using these apps.
Got it. I had another guy, Tim, who runs a marketing agency, and he advised me a similar thing. But one question I want to ask him was that these are more like seasonal methods, in my understanding, right? And do you think in crypto, are there seasonal methods and founders should jump on them really quickly, or the fundamental always remain the same and you can always use that regardless if you were building the product in the previous cycle or you're building the product in this cycle, the fundamental of going to the market and acquiring users remains same. What are your thoughts on that?
That's interesting. I do think companies change, products change together with these companies. So right now at the stage that we are, this specific strategy makes sense. I wouldn't go as far as saying that the same strategy will make sense 2 years from now, right? So I do think that they have a cycle and that they may change. That doesn't mean that you cannot use the same concepts in the future, right? But just in a different way. Even the current culture we have of moving fast and breaking things, it's okay now because we can put all the executive team in the same room, right? And make super fast decisions. But once the company starts growing and we, have more people, more teams, more leaders to take decisions, things must change a little bit. And you have to adapt with that, and your product will have to adapt with that. Especially as your product grow more mature and more complex, you cannot move so fast.
Got it. Now, you've been building products, it's safe to say, for the past 15 years, and out of that
Yeah.
in crypto as well, right? And if you were to advise a founder who is building a product, what would you advise, right? Because you shared some things, move fast, break things. You said you guys built a product in 7 days. Now, there are founders who take months to build a product and then they launch it and then nobody wants to use it, right?
Yeah.
Because like there's a saying in Y Combinator, build things that people want. So what would you advise other founders that are building products? And that will cover ideation, product and stuff like that. Like, what is your experience? How would you tell them to pick an idea, take an idea to an actual product and then, get users on it? So like, it's a packed question, but
Yeah.
what are
Yeah.
your thoughts on that? Yeah.
Yeah, I love this question because I don't think there is a correct answer. So I'm always thinking about that all the time and reflecting on that. So first off, the first mistake I see founders doing sometimes is they get too attached to the idea that they only have one product. And sometimes that's not the case. Even us, if you were to look back at Credbull a few months back, we had like two products. And then as the business matured and evolved, we realized we could break things down into smaller products. And I think that's the catch here. Sometimes, yes, of course, some products, they require months to be built. For example, we have an institutional product, B2B, that we cannot just move fast and break things, right? There's a lot of legislation, regulation around these products that takes months to move. But we do break things down here and we create smaller products that they may move fast and break things, right? So I think the approach for founders is looking at your main goal, your main vision, and asking yourself, can I create a smaller, separated product that I can operate more freely with less constraints, that it's not going to affect my entire business, but that is going to allow me to gain some traction, show some results to my investors, to my co-founders, even to my team. Because quite often, first you got to sell the idea to your team, right? You got to convince people and you got to create momentum. So let's say you have your team working in your main platform that's going to take 6 months to ship. Sometimes you should create a small, quick win for the team to create momentum, create some motivation within your software developers and your marketing team. And it could be by just creating a smaller, simpler version of your main product.
Very interesting. So if I were to summarize, your advice is that don't get too attached to your idea because that's what founders do. That's a mistake that they make. And then if your product is will take a longer time to build, see if you can break it down into smaller products and ship it fast, because when your team sees and your investors see that something tangible, it affects their morale and they're more inclined to keep working on that. Very interesting.
Yeah, exactly.
Just before we wrap up, a few more questions. What are you seeing in the next? I'm not sure if we are in the bull cycle or not, but what are you seeing going into the next cycle, and how is a Credbull going to leverage this cycle, or what's next for Credbull in this next cycle?
We're pretty confident for the next year, to be honest, and that's one of the reasons why we're building like crazy right now. We're enjoying this moment where the market's kind of walking sideways, because we know that when the bull market comes, we're going to be ready, and that's why we're building like crazy. And that's also something that I believe in, right? When nobody's talking about the market, that's when you should just put your head down and build. So we do have goals in place for the next quarter and of course for the next year. We're trying to be super rigid for the short term because we already have our goals in place. But for the longer term, we're still experimenting a lot, right? And we're listening to our users, we're listening to our community, and we're letting them build with us. And when I say this, I'm saying that I'm literally opening my Discord every day and going through the comments that people are making and talking about their products.
Yeah, I mean, that's again, going back to Y Combinator, right? There are two things that founders should do, is that ship code and talk to customers. So you're doing both of them. Amazing. So, Lucas, for those people who are interested in Credbull as an investor, obviously nothing on this episode is financial advice. Please make sure you do your own research. But how can people learn more about Credbull? I'll obviously add the links down below, but where would you want them to go and explore if they're interested in learning more about Credbull?
Well, first of all, they can just access our main application, incredible.earn.io. Also, they can go to credible.io where they can find the white paper and get more details about the business itself. And they can also play with our game, Volt app, which is super simple, straightforward on Telegram. And that's one of the reasons I say, hey, you don't want to commit yet? No problem. Just play our game on Telegram and see by yourself the quality that we can ship and the type of products that we can build, because this is going to give you a first glimpse into what we're building for the future. And again, credible.io, you can check our white paper there.
Yeah, I like the approach. It's like show, don't tell, right? Instead of promising people. Amazing. Amazing, Lucas. So with that, we'll wrap up the episode. Thank you so much, Lucas, for coming on. It was a pleasure talking to you. Really good insights for founders from your perspective as a builder and as a sales guy. So I hope you guys can take something away. With that, we'll wrap up the episode. See you in the next episode.